Hi everyone, welcome back to Tax Engineer. I am Balaji Natarajan, an enrolled agent. If you watched my last video about Trump accounts, today's video is more important update because the IRS has already changed one of the big issues with these accounts. Believe it or not, before this change, if a grandparent or even a family friend put just a small amount of money into a Trump account, they could technically have been required to file a federal gift tax return. Yes, even for a small contribution. Thankfully, the IRS fixed that problem. So, let me explain what changed and why it mattered and what you need to know going forward. When Trump accounts first came out, there was a small detail that almost nobody noticed. The money in these accounts is locked until the child turns 18. Because of that, the IRS could treat those contributions differently than a normal cash gift. That created a gift tax reporting issue that caught many tax professionals by surprise. But on June 29, the IRS stepped in and fixed it. Let's see what the issue actually was. Normally, if you give money directly to a child, it's considered a present time gift. That means it qualifies for annual gift tax exclusion. So, in most cases, there is no gift tax return to file. But a Trump account works differently. Since the child cannot access the money until age 18, those contributions could technically be treated as a future interest gift, and future interest gifts don't qualify for that annual exclusion. So imagine this, a grandparent puts just $50 into a grandchild's Trump account. Technically, they might have needed to file IRS Form 709, which is Federal Gift Tax Return. Obviously, that was not what Congress intended. The IRS fixed this through Revenue Procedure 2026-25. Here is the good news. If you meet certain requirements, your Trump account contribution is now treated just like a regular tax gift. You don't have to file any special election. You don't have to submit any extra paperwork. And in many cases, you don't have to file Form 709 at all. Just make sure you keep good records of what you contributed, how much you contributed, and what child's account received the money. Now, here is the important part. There are four requirements and you need to satisfy all four. First, you must be an individual making the contribution, not a trust or business. Second, your only taxable gift during the year must be these Trump account contributions made before the child turns 18. Third, the total gifts you give the child during the 2026 must stay below the annual exclusion amount of $19,000. And finally, you can't already be required to file a gift tax return for some other reason. If all four of those are true, you are in great shape. Here's an example straight from the IRS. Let's say you contribute $5,000 to a child's Trump account. Later in the year, you give the same child another $13,000. That's a total of $18,000. Since you are still under $19,000 annual limit, the safe harbor applies. No gift tax return is needed. Now let's change just one number. Instead of giving another $13,000, you give $14,500. Now your gift total becomes $19,500. That's over the annual limit of $19,000. And once that happens, you lose the protection of the safe harbor. So you may need to file a gift tax return in this case. That is a part that I think a lot of people will miss. The IRS treats this as an all or nothing rule. If you go over the annual limit for even one child, you don't just lose the safe harbor for that one child. The protection can be lost for all of your Trump account contributions for the year. That's why it's really important to plan your gifts before the end of the year, especially if you are giving money to the multiple children or grandchildren. So, what's the takeaway? Keep track of all the gifts you make to each child, not just the Trump account contributions. Try to stay under the annual exclusion amount if you want to avoid unnecessary gift tax reporting. Keep records of every contribution you make, and if you are planning larger gifts or helping several grandchildren, it's a good idea to talk with a tax professional first. A little planning now can save you a lot of paperwork later. So that's the latest IRS update on Trump accounts. The good news is the IRS recognized the problem and fixed it, but you still need to pay attention to that annual gift limit and keep good records. If you found this video helpful, I would really appreciate if you hit the like button and subscribe to the channel. And if you know a parent, grandparent, or anyone planning to contribute to a Trump account, send this video to them. It could save them a lot of confusion. Again, I'm Balaji Natarajan, an enrolled agent, and this is Tax Engineer. Thanks for watching. I'll see you in the next video. Bye.